Good morning, my dear students. Today, we would like to discuss some important deductions which are expressly allowed while we are computing income from income from business. So, section 30 to 37 deals with these deductions which are expressly allowed while we are discussing our scheme of computations. First one, which is added along with the profit as per the profit loss account, that is deductions expressly allowed or expenses. First, 30 to 37 deals with these deductions. So let us see one by one. First one, that is section 30, rent, rate, tax, repairs and insurance of the building. This deduction is allowed in respect of rent, rate, tax, repairs and insurance for premises used for the purpose of business or profession. The important point that you have to mind, capital expenditure incurred on repair or current repairs on building shall not be allowed in this respect. So only operational expense like rent, rate, tax, repairs and insurance for a premium of the premises. The next, section 31, repairs and insurance of machinery, plant and furniture. When any amount which is shown on the debit side of the profit and loss account as repairs, insurance of machinery, plant and furniture used for the purpose of business or profession will be allowed. And the next one, that is depreciation on fixed assets. Very important point, as per section 32, depreciation is allowed as a deduction. But only one thing, that is it should be used for the business purpose. Depreciation is allowed on the return on value of the asset as per the income tax records. The rate of depreciation calculated under this income tax rule, that is different from the depreciation calculated under the provisions of the Companies Act. We are already discussed in our previous classes. Here, depreciation is calculated on the basis of block of assets. Normally, we are calculating the rate of depreciation on individual assets. Here, we are using the term that is block of assets. Block of asset means a group of assets which comprises the same rate of depreciation. Tangible asset like building, machinery, plant or furniture, etc. And intangible asset, know-how, patent, copyright, trademark, license, etc. etc. The concept behind this block of asset means a bunch of assets or a group of assets which has the same rate of depreciation, falling with the classes of assets, in respect of which the same percentage of depreciation rate has been prescribed. For example, I will give you an example for that. A machinery having the rate of depreciation as 25% will come under a block of assets. Machinery having 40% rate of depreciation will form another block of assets. So, block of asset means group of assets falling with the same class of asset, a respect to which the same percentage of depreciation has been prescribed. Okay, that is allowable expense or allowable deduction. The next one, that is investment allowances, 32 AD. Investment allowance at the rate of 50% of cost of new plant or machinery acquired during 1st April 2015 to 31st March 2020 for setting up an undertaking or enterprises for manufacture or production of any article or thing on or after 1st April 2015 in a notified backward area in the state of Andhra Pradesh, Bihar, Telangana or West Bengal. These are provisions regarding investment allowance. Investment allowance is an allowable deduction. But one thing, how much is the investment allowance deduction? 50% of cost of new plant and machinery. One condition is that should be acquired in between 1st April 2015 and 31st March of 2020. For what? For setting up of an undertaking or enterprises for a manufacture or a production of any article. Clear? One more thing, that is, it should be in notified area, like state of Andhra Pradesh, Bihar, Telangana and West Bengal. The next important deduction, that is tea development account or coffee development account or rubber development account. Section 33 AB. Any amount which is deposited in these accounts, like tea development account, coffee development account or rubber development account, any amount deposited, straight away 40% of profit and gain from the business growing and manufacturing tea or coffee or rubber in India, whichever is less, will be allowed as a deduction. What is the amount? Any amount which is deposited in this respect, or 40% of profit from this business, whichever is less, can be claimed as deduction. Okay. The next one, that is site restoration fund. That means section 33 ABA, any amount which is deposited in this site restoration fund account, or 20% of profit from the business, whichever is less, in the case of an assessee carrying on the business of prospecting or extraction of production of petroleum or natural gas, or both in India. Suppose an assessee is carrying out a business of extracting minerals, petroleum or gas, he can claim this deduction. What is the amount of deduction? Any amount which is deposited in this account, or 20% of profit from this business, whichever is less, can be claimed as a deduction under this category. And the next one, that is section 35 scientific research expenses. It's important area. Any amount which is particularly spent for scientific research in business can be claimed as a deduction as per this section 35. So what are the provisions in this respect? Let's just see in detail. Any revenue expenditure incurred by an assessee, or any expenditure on scientific research carried out by assessee himself, can be claimed as deduction. Or any contribution made to outside, like university, college or other institutions for carrying out this research expenditure. An amount equal to 150% of the sum paid to research associations which has its objects of undertaking of scientific research to a university, college or institution, can be claimed as deductions. So when an individual donate 100 rupees to an institution for carrying out this research, he can claim 150 rupees as a deduction, that is on 50%. The next, company for scientific research. That means any amount which is equal to any amount paid to a company to be used by it for scientific research can be claimed as a deduction, or it is an allowable deduction. The next, any sum paid for a social statistical research association or university, college or other institution. Amount equal to amount paid to a research association or a university which has its object the undertaking of research in this respect. And any amount which is paid to approval of national laboratory, a deduction amount, that is any sum paid by an assessee to national laboratory or university, Indian Institute of Technology IIT, by a prescribed authority, will be eligible for weighted deduction of 150% of the amounts of paid. 150% can be claimed. But one important point, that is this deduction is restricted up to 100% from previous year 2020-21 onwards, that is next year onwards. Okay. The next one, company engaged in business of biotechnology or manufacturing of articles or things, etc. Suppose a company is engaged in the business or a biotechnology or any other business of manufacture of production of any article, not being an article of things specified in the listed of 11th schedule. Any amount which is contributed towards this, a deduction of sum equal to 150% of expenditure will be allowed. Here also there is a restrictions. Amount is limited up to 100% from previous year this year onwards. That means next year onwards this amendment will be came into force. And next important deduction, that is section 35 AAB, capital expenditure to obtain a license to operate telecommunication services. Any capital expenditure incurred in this respect, either or before the commencement of the business, to operate a telecommunication service, this is an allowable deduction. The next one, that is capital expenditure incurred for acquiring any spectrum rights. We are already discussed in various newspapers, 2G spectrum, 3G spectrum, etc. Any capital expenditure incurred for acquiring any spectrum rights for telecommunication services, it is allowable in equal installment over a period starting from the previous year, in which the payment of spectrum fee is made for year which business commences. The next important deduction, that is section 35 AD, investment linked tax incentive for specified businesses. This section is inserted to provide for investment linked tax incentive. 100% of capital expenditure incurred wholly and exclusively for the purpose of a specified business carried out by an assessee is deductible in this previous year in which the expenditure is incurred. The next deduction, that is capital expenditure on scientific research. We already discussed all these things. Any assessee in relation with the scientific research related to the business incur any capital expenditure is allowed as a deduction in full for the relevant previous year. The next one, that is expenditure by way of payment to rural development fund. Any amount which is donate to the national fund or rural development, or the payment of any sum to the national urban poverty eradication fund, fully is allowed as a deduction in this respect. And the next one, that is expenditure incurred on agricultural extension projects, section 35 CCC, where an assessee incur any expenditure on agricultural extension project notified by the government shall be allowed as a deduction equal to the 150% of the such expenditure. Then next, expenditure incurred by a company on skill development project like ASAP, where a company incur any expenditure on any skill development project notified by the board shall be allowed as a deduction equal to 150% of such expenditure. The next one, that is amortization of preliminary expenses. We know what is meant by amortization. Any expenses or preliminary expenses allowed as a deduction under this section, an amount equal to 1/5 of, that is 20% of total preliminary expenses each year of 5 years starting for the year in which the business has been commenced. That is 150%, 120%, 1/5 percentage. That is for 20% of preliminary expense can be amortized in equal 5 installments. The next one, that is 35 DD, that is expenditure on amalgamation or demerger of undertaking. When an Indian company incur any expenditure after 31st March 1999, wholly or exclusively for the purpose of amalgamation or absorption or demerger of the undertaking, an amount of deduction is 20% of such expenditure is allowed in 5 equal previous years. That is, just we are discussed, that is 1/5 percentage, that is 20% can be claimed as 1 year for the 5 years. Then the last one, that is last but one, expenditure on voluntary retirement, section 35 DDA, where an assessee pays any amount to an employee at the time of his voluntary retirement, he shall be allowed as a deduction of 20% of such expenditure for 5 years equally. And the last one, that is section 35E, expense on prospecting or extraction of minerals. A resident assessees may claim expenditure incurred only on exclusively on any operation related to the prospecting or extraction of the production of minerals 5 years preceding the year of commercial production, as the deduction in 10 in equal installment from profit arising from commercial exploitation of such mine or deposits. So these are all the important deductions which are expressly allowed as per the Income Tax Act. Now we have other deduction as per section 36. We will discuss in our next class. 2 more heads we have, that is other deduction, general deduction as per section 37, and some expenditure which is allowed as a deduction under section 37(1), and some deductions which are not expressly allowed as per these provisions, that we will discuss in our next classes. Thank you to all.